The Middle East hot war is underway. Strait of Hormuz chaos causing oil and gold to rocket higher while the stock market is on tilt. What do you need to know? All right. Good morning, everyone. Patrick here, and welcome to your macro outlook for today. Every day, the goal is the same. We want to spot trends early, make better decisions, and stay aligned with risk. I'm here Monday through Thursday at 9:30 a.m. Eastern. So let's dive into this. I'm going to start here with this chart. I'm going to jump straight to crude oil up $5. At one point, we were trading at $75 a barrel. So we have clearly a scenario where oil is reacting. Well, why would it be reacting? Well, of course, it's the Strait of Hormuz. There's a lot of people out there that are talking about what is the baseline price of oil and what is the war premium really worth. And while Goldman came out and said, a full month of closure of the Strait of Hormuz would equate to roughly a $15 barrel of oil higher in premium, and as much as $8 per barrel for every 1 million barrels of day of production lost in their modeling. So there's a lot of short term stresses, but it's not the long term price of oil. And this is the tricky part of analyzing oil here. And the question is, do you get in? Well, first of all, again, the only way that you can justify now buying oil at these higher prices is only if you believe that this will conflict will last a month, or two, if you believe it's going to last even longer. Because if this entire military strike and this whole process cools off within a couple weeks, oil within days could already be taking a little bit of profit. Now, do I think we can see 80 plus dollars on the upside this week? I won't rule it out. At this moment, the stock market, you had a very large amount of participants that were fundamentally bearish oil, a lot of shorts, and overall, a lot of people that simply had no skin in the game in the energy space. And so this has really woken everyone up. It's going to cause some short-term flows. A lot of the FOMO chasers might keep things going for a few days as everything gets rebalanced, realigned. Overall, though, I actually want to be profit taking into this strength. We've been long oil for a month and a half with members. But this has been a very profitable jump this morning. And it's much more actually about where are the tactical exits rather than should there be a new entry for us. And that's certainly something that we're going to continue talking about as we move forward. So the next thing I want to touch on is gold. Gold jumped at one point, being up almost $200 an ounce, up now $85 as the market opens. Clearly, again, a little bit of nervousness caused that gold premium to have a big jump on the upside. Oh, so what is it that we generally will see? Well, first of all, gold volatility remains elevated, silver volatility elevated, and even oil volatility now rocketing to 65%. So we have substantial oil premiums, volatility premiums being priced in right across the board on all of these. In general, the big question is, does gold have it in for it to break to an all-time new high? Now, I was positioned and favoring the scenario where gold is going to do what it has done in the past, which is that after every major gold impulse that we've seen, it is very common for a 2 month to as much as a 4 month period where gold absorbs and consolidates the price before the resumption of the bull trend higher. That remained and still, in many ways, remains my more favorable scenario, which is the one I assigned the greatest probability to. But it's not impossible. And certainly some probability must be assigned to the idea gold just rips to a 52-week high and punches 6,000 in the next month. I'm not going to give it a high probability. Maybe like a 1 in 6 chance that that kind of a scenario happens. Not that it's not tradable, it's just not probable. For me, it's very likely that gold struggles along its previous highs. And what we should see, if that thesis is right, is silver, which is now $4 down on the day, rejects this Fibonacci zone and consolidates back to the 50-day moving average. And you'll see that platinum and palladium are not going to join the party either if this is the case. You can see and also a little bit of profit taking on platinum here, rejecting that fib zone. Palladium as well, having worked its way to this 50% retracement. Overall, you can see while gold as working towards potentially a double top, the other precious metals aren't playing game. The one thing that continues to be interesting is the gold miners, which continue to plug along to new highs. And so at least the gold mining space continues to do very well. So I want to leave all of you with just a quick analysis on the S&P 500 here briefly. First of all, overall, I don't think the war is as big of an impact on the markets as it will be. What happens here on a lot of these tech spaces. What we have is a scenario where the systematic trading tripwire sits at 6,800, a level we just tested this morning. This continues to be a critical pivot. At this juncture, if we see in any way a breakdown below these lows, that could create a feedback mechanism that spurs selling. Is that tripwire going to be tripped? That's a good question. The one thing that I would say is that so far every rally has failed, and the selling is relatively heavy. Overall, when you observe here, again, the Mag 7s opening along their lows, just the Mag 7s not participating. NVIDIA traded all the way back to the bottom end of its range at this stage, which continues to be very concerning for the market because we talked about it last week, how important NVIDIA's earnings were going to be, how all of this plays out. And while the stock market is on tilt, I would not say that it is tripped yet. And it's at the edge of a cliff, and it's a highly vulnerable moment on it from a technical perspective. And the bulls, if they want to save this thing, need to save it now. They're going to need to work it back higher. Otherwise, every day that we trade down along here increases the risk that one bad headline is just going to spur a feedback mechanism of selling, as those systematic traders will have billions, hundreds of billions to sell, and there is no discretion used in that. That's just systematic flow pivots. And so we have to be very, very careful about that. All right, this is where I'm going to end the public portion here and head over to my big picture trading members. Today we're going to go dive deeper into where we're going to profit take some of these energy plays, what's the game plan on the S&P 500, and how to play the next move in gold. A lot of the things we just talked about, how does it translate into actual trades? And that's what we do during the Where's the Trade. So if you'd like access, so you can start a 14-day free trial. The link is in this chat, or go just straight to bigpicturetrading.com. Once you're in, just click on the big orange button that says join now. Otherwise, the rest of you, I'll see you all here tomorrow at 9:30 a.m. Eastern to do this all over again. Thanks, everybody.